G'day guys, and welcome back to the weekly VEMA Trader Bitcoin market scan. My name is Rhys, and in today's video I'm going to run you guys through some of the features that we released last week. Last week was an enormous release with some of the most requested feature requests that we've had from users, so it's fantastic to see them now implemented in VEMA. I'll show you guys what they are and how to use them really quickly, and then what we'll do is we're going to take a look at Bitcoin as it stands today. We'll see if there's any trades that we like the look of, and if there is, I will set those trades up. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so one of the most heavily requested features that we've had recently was a quick entry feature. That has now been added, so you will see when you come to the start charting screen that there is now trigger or quick entry. If you want to do a quick entry trade, all you have to do is click quick entry, and then VEMA straight away gives you your indicative entry. All you have to do is pick the direction, so long or short. In this case, let's say that we've seen this little evening starts forming on ETH on the 1 minute, and we want to get into this trade ASAP. Then all we have to do is drag our take profit, drag our stop loss, and we can enter that trade. So you can see it is so fast to get into these positions, and you will see in a sec that VEMA goes straight in. So that order has now been placed, that position is now open. So in a matter of, 15 seconds max, that trade was able to be entered. So the quick entry is a very cool feature. Price is now going against us, but hopefully this trade plays out well for us. Okay, so unfortunately, that trade we just set up has already lost, so that is a good start. But the other feature that we dropped this week was editable trade. So you can see that I had this trade in monitoring. Let's say that I had set up a retest. I only set it up about 5 minutes ago, but let's say that I had set it up way back here, and price had not done what I wanted it to do, or I just noticed, my stop wasn't where I wanted it, whatever the case may be. Now you'll see that there is a little editing button down here. What happens when you click this is VEMA takes the trade out of monitoring. So it's really important to make sure once you're done editing that you save that trade so it can be back in monitoring. Otherwise, let's say you set up a break and retest. If that break and retest plays out while you're still in edit mode, that trade's not going to enter. So what we do is we come to edit mode, and then we can change essentially anything that you can do on the start charting screen. If I want to move my trigger, you can see I can do that, and the stop loss take profit will now reflect that. I can move those around. I can change from paper to live. I can change my strategy. I think I can change everything except for the trigger. So the trigger is still locked. If I had multiple triggers, I'd still be stuck on alpha. But apart from that, anything you want to change here, you can change. Like we said before, once you're done, all you have to click is update. Then you want to confirm that. And then that trade will now be set up how you wanted it done once you edited that trade. So really handy feature. It stops you from setting up those trades from scratch again. And the last of the big improvements that we released last week was the dashboard improvements. So we now have a live or paper trading filter. You can see that just here. So I haven't placed any paper trades in the last 3 months or so, but I can now select from all my trades, just live or just paper. The other thing that I can do is I can use a date picker to look at an exact range of trades that I would like to see. So let's say that I just wanted to look at all the trades I had taken in the last 24 hours, right? Essentially the trades I'd taken today. Then I can click that and I can just see, okay, we just had that loss on the trade before. If I wanted to look at all my trades for all time, I might pick the last 12 months because I've only been using VEMA for about 3, or this account for about 3. So I can just go, okay, that will now show me all of my trades. So that's it for the improvements from the release last week. What we'll do now is we're going to take a look at Bitcoin as it stands today. Righto, so here we are on the weekly, and you can see that last week's candle was a big bearish engulfing. So not a good sign for Bitcoin, right? I've been talking about the fib levels on the weekly for a little while. We got to the 23.6, which was a good-ish sign. Still not a great sign, but it showed there was actually some movement after a couple of weeks of us just sitting essentially at the bottom of the drop. We pushed back to 23.6, and then we had a really strong rejection, right? A big bearish engulfing. Now, if any of you are familiar with Donnie's trading, he is a big proponent of what he calls the springboard, right? When it comes to fibs, essentially the less of the retracement that we see, so the lower the fib level, then the bigger the next move down is likely to be. So if we came back to the 61.8, the next move down might just be, say, the 23.6. If we only get to the 23.6, there's probably a good chance there's going to be a significant move down. And so he compares it to like a diving board, right? A really stiff diving board, it won't bend very far, and then it'll launch you a decent way. A really loose diving board will bend a long way, and then it won't send you that far. So really good analogy for fibs, in my opinion. So what that kind of has me thinking is we may be heading down, right? Not even, even without the springboard thing, a big rejection from the 23.6 is not a good look. Now, it's not confirmed, right? We haven't broken this low. So even though we have a rejection from there, it doesn't mean that we're not going to keep heading up, but it's not a great look from Bitcoin to reject that hard from the 23.6 after taking 2 months or so to get there. Not something that gives me a lot of confidence in Bitcoin at the moment. The other thing is the DXY is on a tear. I was looking at the DXY this morning, which for anyone who doesn't know is the US dollar index. It's essentially like a measure of strength of the US dollar in a few different ways. I was looking at this morning. It is punching up through a monthly level of resistance, right? A monthly supply zone. It has put a big dent in it. Its last retracement was quite minor, so using the springboard analogy in reverse, its last retracement, it's had a big move up. Last retracement was tiny, so good chance it's going to keep punching up through that zone, potentially head to new highs, and you often see an inverse correlation between it and Bitcoin because Bitcoin is measured against the US dollar. So if the US dollar is performing well, then it's kind of doesn't guarantee that Bitcoin won't do well because they might both be doing well and Bitcoin might outpace the US dollar. But if the US dollar is doing well, it's kind of a slower on Bitcoin at least. That could be the catalyst, right? DXY punches up, Bitcoin punches down, and we see something like that. So, this looking at things on time frames this high might be completely irrelevant for your trading. But for me, I like to have a big picture view of what I think is going to happen. Partly for just my investing, which I do on the side, but also it helps me with my trading because it gives me like biases and just having that zoomed out, more macro look at what could be happening can really help you even when you are trading on those smaller time frames. So that's what I'm seeing on the weekly at the moment. When we get down to the daily, we can see we had an absolutely beautiful breakdown of that ascending wedge that we were talking about last week. So that's a bad sign for Bitcoin. A bearish wedge is typically an ascending wedge is typically a bearish pattern, especially after a prolonged move down like that. We've now seen that break down, so not a great sign for Bitcoin at the moment. Have seen a bit of a buyback over the last 2 days, but not a whole lot, and that's kind of what you'd expect after a move like that, right? It's a bit of a scary move. Scary is a word with negative connotations. I don't see it as a scary move because I kind of want Bitcoin to come down. But if you're bullish on Bitcoin right now, that's not a move that's going to give you a whole lot of confidence. So you can sort of understand why you wouldn't be seeing much buying pressure at the moment. In terms of where we're heading next, the zones that I'm really paying attention to are these ones. We have, in fact, I'll put that a bit wider, and the reason I do that is if I'm zoomed in, I want to remember that wick was there, just in case I use it for a stop loss or something, and I might not be able to see that wick at the time. So, most important zones in my opinion. This one here, which is what held us, has almost been busted. You can still leave it on. To be honest, I'll probably go looking for a 4-hour zone because I kind of expect there'll be a 4-hour zone somewhere in there. That's what we actually bounced off both times. So I'll probably go looking for one of those. But for now, on the daily, can draw a zone there. It hasn't been completely pierced, so it's still a valid zone. We formed a supply zone up here, which I would consider a pretty strong supply zone because it led to a big push down. It was retested here. We broke this market structure. That's the kind of zone that I really like to see. Will price get back up there, in the next week? I'd be surprised to see it. Not out of the question. In terms of if we break down and lose this zone, then I would be looking at 20k, right? 19,294 is the top of the next daily zone. So that is not what I wanted to do. I did not want to get rid of that zone, but that's all right. We'll just draw it back in. Little pro tip, how I am mapping that to the bottom of the candle is I hold control. You can see when I hold control, it maps to the nearest price point on that candle, the vertical candle. Sorry, that was a terrible sentence. But it maps to the nearest price point on that candle. So if I have my candle on the 30th of June, you can see it is mapping to that wick. And then if I move it up, it'll map to the body, to the other bit of the body, and then to the top wick, depending on which is closest to the mouse. There is a daily zone that you can draw in here. And it's definitely a valid zone, but it's probably a little bit wide for what I'm looking for. I might go looking for a 4-hour zone instead. But certainly if you are drawing a zone there, there's nothing wrong with that zone. And finally, we get down to the 4-hour. So what we can see on the 4-hour is that there has been a really strong sell-off, right? The same sell-off that we're looking at on the daily, obviously. That's how candles work. But you can sort of see that it's been really strong without any real retracement. So, I always kind of expect a retracement when I do see a move like that. Where we're going to retrace to, I'm not sure. I mean, I'm never sure, right? That's the whole point of thinking in probabilities, and in trading, nothing's guaranteed. What kind of makes sense to me would be this level. There is a daily EQ that's held really well. You can see, especially on the 4-hour, right? That is beautiful. It's also the 38.2 fib of the move down. So you can see I've drawn my fibs from here to down here. It's a 38.2 of that move. That level kind of makes sense to me. It's not a level that I would take a trade from though, just because it's not how I like to trade, right? There's no zone there, so I'd have to use the 50 or something for my stop loss. It's not in my trade plan to take, or certainly not this trade plan, to take trades that appear there. So there's really no trade for me from that level, even though that's kind of what I'm thinking will happen, or might happen. Price heads up there. In terms of to the downside, these two zones are the key. So you can see there's a 4-hour zone in here. That's kind of what's held us here. I think the real key here is this EQ, right? You can see that's really what we bounced off last time. We went on that run, and it's really, it's held us perfectly just here. So that EQ to me is the key. I am going to set up a short. Let me just get rid of these bad boys. I'm going to set up a short looking for the breakdown of that EQ, but importantly, I'm going to set it up below this zone. Now, I don't think this is the strongest zone. It's a bit of a weak pivot, bit of a weak push out. The real push out came from here. That was a huge move up. That said, I don't really want to short into that zone, because if it does hold, it's a pretty dumb spot to get into a short, right? For the sake of a little bit of patience and losing a little bit of the game, right? Because, if we measure from the first zone down to here, it's, let's say, 6.5. If we measure from that second zone down to here, it's 5.2. So I'll lose out on a little bit of the gain. Potentially, I might have a better risk reward, so it actually might work out better. But I would rather be patient and only take the trade if it breaks that second level, rather than short straight into a possible support zone. The other level that I'm looking at is this supply zone here, and I'm looking at it because it lines up beautifully with the 61.8 fib. Now, I don't really expect price to get there, and certainly not this week. I don't expect price to never get there again. Awful using double negatives like that, but I don't really expect price to get there this week. There is actually a bit of an EQ through there too, so that's just something that even makes me even more interested in shorting from that region. It's just a bunch of reasons that if price does get up there, there is potentially going to be a really good short. So I will set those trades up. Now, important to note, now that we do have the quick entry feature, if you want to set up trades in the traditional style that you're used to with VEMA, all you have to do is click trigger, and then that left panel will look exactly as what you're used to. So I'll set those trades up, and then I'll run you guys through them. Okay, so it turns out I lied to you guys, because what I realized as I was setting up the other two trades was that we have paper trading. So I was like, you know what? Why not take that trade from 38 fib? Set it to a paper trade and just collect some data, right? I have a feeling price gets there, there's a good chance we'll see that rejection. So why don't I just set it up as a paper trade, collect that data, because that way, if I consistently do that, it's worth me making a strategy around that trade, right? Because just because I don't have a strategy for it right now, or sorry, a trade plan for that strategy right now, doesn't mean that I should never have one, because it could be a very, very profitable strategy, and I'm just leaving that money on the table. So I thought, all right, cool. That's what paper trading is fantastic for, collecting data. So I set up a paper trade, just a short bounce from that level. I put Charlie slightly below the 38 fib, just to sort of front run a little bit. The daily EQ is a little bit higher, but I thought, hey, price might only get to the 38 fib, so I would rather be in front of that. Risk management, pretty basic, 1%. Minimum risk reward, 221, just the sort of usuals. I decided to put my stop loss above the 50 fib, because my big issue with this trade is I don't really know where to put my stop loss, because I usually use zones for that, and there's no zone there. But I like the 50 fib. It does look like there's a pretty solid EQ somewhere through there. So it's protected by that. It's protected by the daily EQ. Pretty good reasons to have a stop there. And then the take profit I put on this 4-hour zone here. Now, I kind of want to move that now that I'm looking at it, because I'm thinking of that springboard theory, and I'm thinking, okay, if we get to 38, then reject really strongly, good chance we're going to head way back down here. But you know what? It's a test strategy. I'm just going to get out for my 2.48 to 1 and, call it a day, collect that data. So test is one of the tags, 38.2 fibs with my high time frame bias and a bearish daily bias. So the second trade that I set up was the short from Bravo. So what we were looking for there was the break of this level. I have set that up as the phase 1 strategy that I've set up in a few different of these videos. So what that is a short cross. I mean, it can be a long or a short, but in this case, it's a short. A cross with candle close, right? I want to see a close below that demand zone. In terms of risk management, pretty standard, 1%. I did change the minimum risk reward to 1.5 because it's a candle close. You know, if we see a huge sell-off, I don't want to be getting into a short down here with my stop loss still up here and my take profit right there. That would be a pretty bad risk to reward. So 1.5 I'm pretty happy with. There's a bit more confirmation on this trade than most of my trades. That's why I'm happy to drop it from 2 to 1. In terms of the journal, phase 1 with my high time frame bias and a bearish daily bias. Now, in terms of where I put my stop loss, because there was a little bit of consideration on that, usually when I set these trades up, I do just use the other side of the zone for that. Because there is this zone, let me draw that there. There is that zone there. And this EQ, I can kind of see a scenario where we do sort of come down, close, come up and retest. So I wanted to use the EQ. I wasn't too worried about the top of this zone, but I wanted to use the EQ and the bottom. There is way too many scribbles on there, sorry. I wanted to use this EQ and the bottom of this zone as, you know, potential resistance if we do retest and then come back down. So I have set my stop loss a little bit higher than normal for this trade. Be interesting to see what happens there if this trade does enter. And that final trade that I set up was the short from this supply zone that lines up with the 61.8 fib, that lines up with the 4-hour EQ. Now, I did add an expiry date. Sorry, my English is all over the shop today. Don't know why. Too much caffeine, not enough caffeine, something uncaffeine related, who knows. I did set an expiry date on this trade, and the reason for that is it's the kind of trade I can see myself forgetting about because I don't really expect it to enter this week. I can see, you know, some sort of bear flag or something forming. It might take a few weeks to get there, and I can also see it not entering, right? We could just break down. If we do just break down, which is kind of what I was expecting to see on the weekly and kind of what this trade, the Charlie short, is about, I don't want price to come back to this level in a couple of months, couple of years, you know, whenever, and enter this trade. If I like the look of that trade again in the future, I can always set it up again. But I would rather have that expiry date there to delete this, or not delete, but to you know, stop this trade from monitoring and stop it from entering if I do forget about it. So put an expiry date on this trade for that reason. In terms of risk management, pretty standard for me. 1% account risk, 2 to 1 minimum risk reward. I did do something a little bit different with my stop loss. And the reason for that is last week I spoke about how I was setting my stop loss differently in my own trading compared to in the videos, in the trades that I set up for these videos. So when I was setting this trade up, I made sure to think about, okay, what did I do this morning when I was setting up this trade? What I did a little bit differently was I looked at these wicks and I looked at this EQ level, right? It's quite a strong, that was probably a bad spot to circle because we didn't actually touch it there, but you know, it's quite a strong EQ. And I thought, okay, I'll give this a little bit more room because price might punch through the zone, hit the EQ, and then reject. You'll notice that I haven't given it, you know, it's not on top of all of these wicks. And the reason for that is at some point, I kind of have to just go, okay, that is it. Because otherwise, what I'm going to do is go, well, I'll put it above those wicks, right? So I've now put it above these wicks, but then I go, oh, well, there's wicks here. So I better put it above those wicks. Oh, well, then there's this wick here. And what I'll do is I'll just move it up and up and up. At some point, you have to go, okay, that is enough. That's where I want to put it. And for me, that's probably about it. I'm sort of just really looking at two things. This week here, because that was the retest, which is kind of what I'm looking for. So similar trade in some sense. And this bit here, there is, you know, what I would consider a pretty weak 4-hour supply there. There'd be a much stronger 4-hour supply here, but it'd be a huge zone. I won't draw it in. There'd be something, you know, something like that to just keep it shorter. So I have used the bottom of that zone, which actually lines up perfectly with the EQ, to give me that little bit of room on my stop loss. So that is why my stop loss is where it is. Let me get rid of those. I'll leave that one actually, because it is kind of relevant to this trade. So that is the stop loss. The take profit, I'm taking profit at that daily EQ because, you know, I do kind of think if we get up here, that's likely to act as a level of support. We may, you know, head down through it, but I would rather just take my profits and run. So I am quite happy to take profit at that sort of daily EQ 38.2 level. And then we get to the journals. So in terms of tags, with my high time frame bias, My daily bias is bearish. It is a 61.8 fib. There's a 4-hour supply zone. I am using fibs, and there is a 4-hour EQ at that level. So pretty standard tags as well for me. Here I'm going to go into psychology a little bit. So if you just want to see the trade setups, cool. You can tune out from here. Last week I spoke about how one of the big things that has affected my trading is wanting to be right. And I spoke about how I'd made a lot of progress on that in my own trading, but obviously it was still affecting me in terms of trades I was setting up for these videos because, as I showed last week, there was a completely different setup that I had basically thought was the same setup between my trading and the trades I set up for these videos, which was pretty cool. Pretty interesting to see that. So this morning I was reading Trading in the Zone, and I was thinking about me wanting to be right, and I kind of realised part of that is me not admitting when I'm wrong as quickly as I should, right? As quickly as I kind of start to see things where I'm like, oh, that's not a good thing to see for my trade. But because I want to be right on the trade, I ignore it and I go, oh, like, so say a really good example would be if I start to get a candle close into here. I see one candle close, that's not good for my trades. But I go, that's probably a fake out. The next candle will shut down there. And sometimes they do, right? They absolutely do at times. It's not delusional, but I don't know the data of how often I get a close in there and it stops me out, and how often I get a close in there and it goes in the right direction. I can now start collecting the data, but that's something that's always been a thing where I really want to see that next candle close out. I want to see that fake out come. So what I realized I could do was I could make rules or write things down for when I'm wrong on this trade, and then what I will hopefully experience is I'll be like, well, I'm right about being wrong, right? So even though I hate being wrong, I'm never going to be right 100% of the time in trading. So one way that I thought of that I can try and help counteract that is to try and be right about being wrong. Now, obviously the best solution to this issue with my psychology is to eliminate it completely. And that's something that I am working on. That is something that, honestly, just reading Trading in the Zone, I felt like it eliminated 80% of that issue again. To be honest, I felt like I eliminated 100%, but sometimes you will lie to yourself. So it probably, I definitely feel like it put a big dent in it. I was like, well, yeah, of course I'm not going to be right 100% of the time in the market. I don't know everything that's happening in the market. I don't know every person who's trading in the market, all those sorts of things. That did put a big dent in it. But this is just another precaution I can take, and hopefully it can give you guys some ideas on how to work on some of your own issues in psychology. So what I have done for this trade is written out, I will know I'm wrong on this trade, end exit, right? The end exit is key because that is the rule that's actually going to help my trading, improve my results. But I will know I'm wrong on this trade is, I guess, the psychological aspect of it. End exit when, and then I've got some rules, right? Or some ideas of when I'll exit. So one, price closes above the bottom of the zone twice. So that's essentially what I was talking about before, right? We get one close in, I want to see a fake out. We get a second close in, it's definitely not a fake out. So if that happens, I will exit this trade and I will be right about being wrong. Price wicks through the zone and then closes in the zone. So if we eat that zone completely, but do come back down and close in it, not good for my trade. If we wick up, close below, that's something I'm pretty happy with, right? That's a pretty solid rejection. Maybe I was just a little bit wrong about the top of the zone, but it's kind of what I want to see in that region. I'm happy to stay in the trade. But if we wick up, close in the zone, not good for my trade. I will then exit. Price closes above the top of the zone once. If we get a close above here, bad for my trade. So I'm just going to get out straight away. I'm not going to be like, oh, this could be a fake out. I'm done. I'm out. And then the final one is price hits my stop loss. Pretty self-explanatory. If price hits my stop loss, I know I'm wrong. I don't have to do anything about it. It's already exited. So hopefully that will help me with my psychology. I don't know. It'll be interesting to see, if this trade does enter and any of those things happen. How do I feel about it? How do I react? Do I follow those rules I've just set for myself? Do I ignore them? Time will tell. But that was an idea I had for how I can work on an aspect of my psychology that has negatively affected my trading. So hopefully it can give you guys some ideas of how to work on your own issues with your psychology in your trading. Anyway, that's it for me for this video. So we will submit those trade setups. Hopefully we pick some winners this week. Hopefully you guys are all having a fantastic week. Hopefully you enjoy the new features that we brought to you guys. Have a great day, happy trading, and I will talk to you very soon.